Japan's 20% flat crypto tax bill clears the lower house. Japan's lower house of parliament has passed a bill that would tax crypto gains at a flat 20%, according to a CoinDesk update posted on June 12, 2026. The measure now moves to the upper house. If it becomes law, the flat rate is expected to take effect in 2028, and crypto exchange-traded funds could list on the Tokyo Stock Exchange as early as 2027. The vote matters because of what it replaces. Crypto profits in Japan have been treated as miscellaneous income and taxed on a progressive scale that, with local levies added, can climb toward 55% for high earners. A flat 20% would put digital assets on roughly the same footing as gains from listed stocks and other financial instruments, which are already taxed at about 20% under separate self-assessment rules. A long-standing complaint moves toward resolution industry groups in Japan have pushed for this change for years. The headline grievance was simple. An investor in the top bracket could owe more than half of a crypto gain to tax, while the same person realizing a stock gain would owe roughly a fifth. That gap pushed traders and companies to book activity offshore or sit on positions rather than realize them. Reclassifying crypto closer to other financial products is the mechanism the bill uses to close that gap. The 20% flat treatment is the centerpiece, and the 2028 start date gives exchanges, custodians, and the tax authority time to adapt reporting systems before the new rate applies. One bill passing one chamber is not the same as law. The upper house still has to act, and tax legislation can be amended or delayed. Treat the 20% figure and the 2028 timeline as the current proposal, not a settled outcome, until the second chamber votes. Tokyo-listed ETFs would widen the on-ramp. The second piece of the update is the prospect of crypto ETFs trading on the Tokyo Stock Exchange, anticipated as early as 2027. That would let domestic investors hold regulated, exchange-listed crypto exposure inside ordinary brokerage accounts, rather than only through crypto-native venues. ETFs and a lower realization tax work in the same direction. A product that trades on the main national exchange lowers the friction of getting exposure, and a flat 20% rate lowers the cost of taking profits once you have it. Japan already has a deep retail brokerage culture, so a listed crypto vehicle has a built-in audience if approvals land on schedule. The math that changes for spenders. For anyone who spends crypto rather than just holding it, tax treatment is not an abstraction. In most jurisdictions, converting crypto to fiat is a taxable disposal, and that includes the moment a crypto card sells your assets to settle a purchase at the register. A high marginal rate makes every realized gain expensive. A flat 20% makes the after-tax outcome predictable. That predictability is the practical shift. A Japanese resident weighing whether to fund a crypto card from appreciated holdings has until now faced a tax bill that scaled with their income bracket. A flat rate detaches that decision from how much salary income they earn in the same year. It does not remove the disposal event. And it does not change the network and conversion costs baked into card spending, but it removes one of the larger variables. This connects to a broader theme in Japan's market this year. The country's 3 megabanks have been working toward a joint yen stablecoin, and SBI Shinsei Bank moved to pay depositors in BTC, ETH, and XRP. A cleaner tax regime sits underneath all of it. Clearer rules on what you owe when you realize a gain make consumer-facing crypto products easier to use without a surprise bill at filing time. The next checkpoint is the upper house. A clean passage there sends the bill toward enactment, with the 2028 start intact. Amendments, a softer rate, or a pushed-back date are all still possible, and the ETF timeline depends on separate listing and regulatory approvals at the Tokyo Stock Exchange and Japan's Financial Services Agency. For now, the signal is directional and strong. The larger of Japan's 2 legislative chambers has voted to cut crypto's tax rate by more than half, and to lay groundwork for exchange-listed crypto products. That is a meaningful step for a market that has spent years asking for both.